Welcome back, investors, to Ticker Time News. I'm Adam, and let's talk about Tesla's Q3 earnings. Tesla fell in after hours about 5.26%. That's where it's sitting right now, about $210 a share. It was up 0.84% on the day, so it's subtracted that and some here in the after hours. Now, why? What is the problem that investors or market participants are taking with Tesla's Q3 earnings? Well, let's go over a few of the data points, and then I'll give you my thoughts on what's going on here with Tesla. Let's start at the very beginning with what is produced here by Tesla on their financial statement here. Tesla, it fell for the main reason it came up a little short in Q3 with revenue as logistical issues with deliveries and battery supply became a notable problem. Now, Tesla did say that Q3 production rate out of Shanghai surpassed the quarterly record, which is a great thing. And then Berlin production, well, it topped out at a weekly run rate of about 2,000 Model Ys. Tesla did generate $3.3 billion in GAAP net income during the quarter and $3.7 billion in non-GAAP net income. Tesla also reported it produced 365,923 vehicles overall in Q3, which was up 54% year over year, and it delivered 343,830 vehicles, which was also up 42% year over year. So those are good, solid numbers. But as we know from prior, a few days ago when Tesla announced the deliveries and production, it was under what Wall Street had expected Tesla to do. So who's right here? Who's wrong? Were analysts off and it's Tesla's fault, they missed it? Or were the analysts wrong and they overestimated what Tesla is doing? Because 54% year over year in production and a 42% increase year over year in deliveries, those are pretty good numbers in my book. Now, moving on here, operating margin came in at 17.2%. We mentioned this yesterday. Margins, they could be suppressed a little bit or compacted due to inflationary pressures, and that's kind of what came out here. But anyways, 17.2% of sales to improve from last quarter's 14.6%. So that was good. Just year over year, it's debatable. Now, higher raw material cost and a negative FX, so that's the higher dollar, the stronger dollar, affecting profits right here directly for Tesla. And we can see that on one of the other slides here. I forget what the slide number was for that. Let me go down a little bit further. Okay, some of the key metrics here. Here's where we go, right here. Okay, so a negative FX with the currencies, that was an impact as well. But it was offset, Tesla says, that it was offset by higher pricing and leverage from delivery growth. And remember, that delivery number was up 42% year over year. Now, automotive gross margin, excluding regulatory credits, we take that out, was sitting at 27.9%. Here's where the margin compression occurred. That is compared to 30.5% a year ago, and basically even from last quarter. So that's not looking so hot here in my book, okay? Obviously, it can improve, and there are some things Tesla can do to improve that number. Moving on. The automotive gross margin rate was lower than expected, and the expectation from Wall Street was 28.4%. Tesla said it plans to grow its manufacturing capacity as quickly as possible, and this is important. Tesla reiterated, and we talked about this yesterday. One quick side note here. For our private investor community, the note that we sent out today about Tesla's earnings I think it was titled Tesla Earnings Preview. Let me know if you liked that, if that was helpful, because if it was, we could do that for other companies. So if you found that information to be helpful leading up to Tesla's actual earnings, and maybe in a few days we'll share it publicly to see what everyone else here thinks on it. But if you did like that information prior to the earnings being released, let us know. We'd be happy to continue to do that. So that was something new. We've never done that before. I thought the information was pretty cool. It gave you things to look for within the earnings report, and it gave you a heads up on some of our thoughts on that. So let me know if you like that. Again, I think it was titled Tesla Earnings Preview. Okay, moving on. This is the important part. Tesla did reiterate that over a multi-year horizon, so 2, 3, 5, 10 years, a multi-year horizon, that it expects to achieve 50% average annual growth in vehicle deliveries. Now, the rate of growth will depend on equipment capacity, operational efficiency, and the capacity and stability of the supply chain, which has caused problems for Tesla, especially for battery components. Now, to meet this goal in 2022, which I'm glad they reiterated it because it backs up what they have already stated. However, in 2022, this year, for Tesla to meet that 50%, Tesla will need to deliver about 500,000 vehicles in Q4. About 500,000 vehicles in Q4 to meet that expectation. So we'll see. We may need to get a little bit of that Elon Musk magic working here. But again, that's what they would have to do. Now, moving to another segment of Tesla, solar. Solar deployments actually increased by 13% to 94 megawatts in Q3. And that was one of the strongest quarters in recent years for Tesla solar. That was really good. Okay. Energy storage deployments here. Getting my tongue twisted. Energy storage. It was up 62% year over year. That's really good. You know, Tesla Powerwalls, more and more being installed. So that's awesome. Now, Tesla expects to start making deliveries of the Tesla Semi in December. We talked about this yesterday. PepsiCo is slated to receive a shipment on December the 1st. I'll be curious to see if there's any media photos of that delivery to see what the semi truck that PepsiCo will be receiving actually looks like. I'm kind of curious about that one, whether they are, you know, the standard Tesla Semi, or have they done something different since it's going to a brand, PepsiCo. Now, Tesla ended the quarter with cash position of $21.1 billion, driven by free cash flow of $3.3 billion. That is excellent. They've got a bunch of cash on hand, and quite frankly, they're going to need it, because what they need to continue to do is build. Why did I just lose my train of thought? They need to build ... What is it they need to build? Gigafactories. Oh, man. Tesla needs to take their Gigafactory in Berlin, Shanghai, Austin, and they need to find a uniform plan where they can just set these shops up, these Gigafactories, as close to the end user as possible. So raw material goes in one end, and out the other side pops a Tesla vehicle. The closer to the end consumer, the better. The closer to raw materials, also the better. So you're going to have to weigh those, because obviously the consumer, the end user, and where you're getting your raw materials from aren't necessarily at the same place. So bringing those two as close as possible to the Gigafactory will benefit Tesla tremendously. Now, was this Tesla's worst quarter yet? No, but it wasn't the best quarter either. Tesla will need to get its cost under control, and unfortunately, inflation, supply chain backups, they are playing a big part in that process. Also, again, Tesla reiterating the goal of 50% average annual growth in vehicle deliveries is a positive sign. But achieving that in 2022, like I mentioned just a few moments ago, may need some of that Elon Musk magic to actually achieve. But what do you think? What do you think about Tesla's Q3 earnings? Were they good in your book? Not so great? What did you find as highlights? Or maybe a letdown? Let me know in the comments. And speaking of comments, let's pull these up from Mel. First one up here we have, and let's put it up on the board so everyone else can see it. And I'll also talk about the stock chart here a little bit. They have so many products unrelated to automobiles, don't they? That satellite system and SpaceX, that's what props them. Okay, that is a really good point. Tesla, okay, you can think of Tesla as a few different things. Tesla itself, all right, is electric vehicles. Tesla itself is solar and solar storage. So solar panels you put up on your roof, solar power, you put a power wall in your garage. So solar, battery storage, the electric vehicle, those are Tesla. Another thing that is Tesla is robotics. Robotics is also part of Tesla. Robotics has the opportunity to actually be the biggest in the tent under umbrella, the Tesla umbrella. Solar, battery storage, electric vehicles, robotics. Robotics could totally steal the show. Then outside of that, connected by Elon Musk, not necessarily Tesla, you do have SpaceX, right? You also have the Boring Company, which is drilling those holes underground to build highways for cars to travel underground. Tesla, I'm sorry, not Tesla, SpaceX does have the satellites. They put them up into orbit, okay? SpaceX has the internet also under its umbrella. So Tesla is not necessarily linked directly to, or I should phrase this in a different way, the umbrella of Tesla. It doesn't have SpaceX. SpaceX has its own umbrella, but they are linked together by having the same CEO and the same founder, Elon Musk. And then third is the Boring Company, drilling those holes underground. That's its own umbrella, its own company. They are all linked by the same founder, the same CEO, Elon Musk. But Tesla itself is only solar, electric vehicles, robotics. Okay? So it can get confusing because you hear about SpaceX, you know, the satellite Starlink and the Boring Company. You hear about these other companies and you may assume that, okay, they're all under the Tesla umbrella, but they're not. They're under the Elon Musk umbrella, if you want to look at it that way. But Tesla is only those three components: solar, electric vehicles, and robotics. Okay, so just keep that in the back of your mind as how these things are set up. Let's see here. Next one up right here. Let's get this loaded up. I didn't get a chance to look at it. Sorry. No worries. Tesla took too much of my money when I was a noob. I'm holding a grudge. Isn't that funny? Yeah, Tesla moves very quick. Very quick indeed. And before you know it, it can be up 10, 15, 20% in just a few days, and it can just as quickly swing in the opposite direction. What I do find interesting, and this happened all over the market today, and it's something that we talked about yesterday, is with the weekly expected moves, okay? Which we do give out the weekly expected moves for Tesla to our private investor community. But these two purple lines right here that I highlighted in blue, that's where Tesla should close by the end of business on Friday, within those two lines. This is the weekly expected move, okay? Where Tesla should move over the next week. This is backed up by an equation using implied volatility and options market data to come up with these numbers. And you can use this formula and the options market data to get these, and they are correct 68% of the time. So that's a pretty big win rate in my book. For example, and this is what I showed yesterday, and I'm going to show this example a lot today, is that when a stock, a indice, whatever the equity may be, when it gets above the weekly expected move before Friday, like Tesla did yesterday, okay? Tesla gapped up, opened the day, it went above that weekly expected move, and what did it do? It came right back down to close the day within that weekly expected move. Today, Tesla did not get above that weekly expected move. It stayed inside. Now, in the after hours, dropping down to about 210, which is about right here at the bottom of this bluer shaded box, it is still within that weekly expected move. So the upper end of that for Tesla is 225. The lower end is 184. All right, let's keep moving. With Tesla on the chart here, I do expect Tesla to finish the week within this weekly expected move. I don't expect it to go outside of it. It'll probably sell off a little bit, bounce around, move sideways, maybe even catching a bid, depending on other market conditions. And unfortunately, this market right now today is not driven. You are very welcome. Absolutely. Unfortunately, today, this market is not being driven by the fundamentals of the companies in the market. It is being driven by the Treasury market and Fed policy. That's it. Those two things are driving price action in the market. Some may say that's not fair. Some may say that's not how it's supposed to work. Some may say it's never worked this way. Why is the market acting like this? Using the Treasury market to force price action and Fed policy to force price action. It's almost like market participants are hyper aware and hyper focused solely on those two aspects of the market. and they're not focusing on the traditional fundamentals of the companies that make up the market. We're in earnings season right now. Earnings should be driving the story, not the Treasury market and not Fed policy. That is a problem with this market today. And it is why this market moved how it did today, mainly because of the Treasury market. I was just about to say yield needs to just chill. Yes, yields need to chill. They do. They really, really do. Unfortunately, we've got Fed officials coming out saying that they need to go up. The Fed funds rate needs to go up. That doesn't help the market. Okay, let's go here to the SPX, which is the S&P 500. Let's get this chart set up and aligned here with where we want to see things at. Now, remember, yesterday, the weekly expected move, we've talked about this numerous times and how it's supposed to act, right? For the SPX, and I'll go through the SPY, the Qs, and the IWM to make sure you have these numbers. But we give these weekly expected move numbers to our private investor community every Sunday evening. The upper end is 36.97. The lower end is 34.68. We closed at 36.95. Yesterday, we gapped up. We got outside of the weekly expected move. We closed outside of the weekly expected move. And when that happens, traditionally, when we come outside of the weekly expected move, that's when you can short, because by the end of the week, the market or the equity, the indice would have come back down to close within the weekly expected move. The same thing can happen on the bottom. When the market moves outside of the weekly expected move before Friday, you can go long as the market, the indice, the stock that you're looking at, it should go up and close within the weekly expected move by the end of business on Friday. That's how this is supposed to work. And it has a 68% win rate on working this way. You can also use it to help manage risk, right? If the market is getting close to that weekly expected move, you know, it starts out in the middle every Monday. If we are starting to get up closer and closer, maybe that's when you start to take some profits on any of the longs you may have. And then if it is, you know, if you're shorting the market, the closer you get to the bottom end of the weekly expected move, start taking profits from those shorts and then start looking for setups that if we go to the outside, it'll come right back in. Same thing on the top end. If it goes to the outside, it'll come back in. So look for those setups. When we're at or above or below the weekly expected move, look for setups to get yourself back inside the weekly expected move. Now, today's market, the trade was choppy, just like yesterday. Let's go to the 5-minute view here for the SPX. I got to click a button here right quick, open it up. Just want to look at today, okay? This is today right here. This is how choppy it was today. Down, up, down, up, down, up, down, 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 and slowly coming back up, okay? Now, I do find it interesting, all right? Talking about the weekly expected move. Look at what happened mid to late morning right here, all right? When the SPX was selling off, the weekly expected move held as support. It held as support. This is the 5-minute chart, so 5, 10, 15 minutes. Then it flipped and it acted as resistance for about 15 minutes before finally selling off. Then when we were coming back up, it used it as resistance. And then at the end of the day, it used it as resistance. You can count on these lines to act this way. This is how the weekly expected move and those lines are supposed to interact with price action. Okay? I just want to point that out for today because it was spot on, and you can trade knowing this knowledge in advance. You hardly ever get solid data that you can use that you've gotten in advance to the price action as these weekly expected moves. They are so important and vital to a successful trading strategy. All right. The major averages, they did spend some time in positive territory first thing this morning. However, they were in the red for most of the session, as we can see on the chart here. Ultimately closing off session lows, which was pretty darn good. I was unsure watching it here into the close. This point right here where it was just moving sideways, I wasn't sure if it was going to flip and start sinking from there. But we do have a pretty nice trend line here into the close coming up. That on a 5-minute time frame looks pretty good. And you could use this setup because remember, you need 3 points. 3 points on that trend line for it to be validated. Okay? You could have used that intraday to trade intraday. All right? This would have been a nice little trade setup that developed here in the afternoon trade. Okay. Continuing to move on. Price action for equities was driven by price action in the Treasury market as yields lifted off to fresh highs for the year. Let's look at the 10-year. US 10Y. That's the 10-year. The yield curve between the 2 and the 10 is still inverted. The longer this thing stays inverted, the more it has me worried. Now, let's go to the daily view, not just the 5-minute view here, to get the bigger picture, because we broke that trend line that we drew here just a couple of sessions ago, hoping that this could stay as resistance. Unfortunately, it did not. The 10-year rose 13 basis points today to 4.13%. This is the highest level since 2008. I saw a prediction today. You know what it called for? The prediction said that the 10-year was going to 9%. Can you imagine a 9% 10-year yield? What would that do to equities? It will crush the Qs completely. I mean, I can't imagine how far the Qs would be down if we had 9% in the 10-year. That's just crazy. Anyways, that was a one-off article that I read. I don't know how reliable or how true that is. But we did hit a record today since 2008. Now, on the 2-year, US 02Y. The 2-year rose 12 basis points to 4.56%. That trend line that we drew a couple sessions ago, maybe even yesterday, I can't remember exactly when we drew that, but it broke that trend line today. Or hopefully what we were hoping was a resistance line that the 2-year would respect. It did not respect that resistance line. Not at all. So going back to your comment, yes, yields need to chill. How about we get a hashtag? Hashtag chill out yields or something. I don't know. But they definitely do. Now, those moves followed an admission late yesterday by the Minneapolis Fed president, who is a 2023 FOMC voter. So they're not voting yet, but in just a couple months, they will be. Now, he argued that he could see the Fed funds rate go up to 4.75% if he does not see any improvement in underlying or core inflation. That's core CPI. The core CPI number. That's what he is watching. And that's what he just stated needs to come down, and it needs to show significant reduction. Core CPI, is it reducing? No. September core CPI ran higher. We can't let that happen, or the Fed is going to hike and tighten until something breaks. Now, earnings since yesterday's close were generally better than expected, but they were not able to offset the concerns about rising interest rates. Netflix up 13.1%, Travelers 4.4%, United Airlines up 5%. They were among the more notable standouts, closing with sizable price gains after reporting quarterly results. Now, rising oil prices. We need to talk about this. Not W, and I need to get my cursor over here. U.S. oil on TradingView, real simple ticker to remember. If you don't have an account to TradingView, we do have a link in the description of this video to TradingView. You can click on it. You can sign up for a free account on TradingView to use a lot of the features. It's on their free plan. But some of the more advanced features, they do have tiered plans for you. But anyways, here is crude oil. Now, of course, it's come off its highs, okay? It's not anywhere near the highs earlier in the year. But it is playing this ping pong battle across this green shaded box here. It's staying a little bit, or it's spending a little bit more of its time below that line than above it, but it is pinging back and forth off this line. Right now, it is down a little bit underneath that green line. That green line is about $88 a barrel to about $90 a barrel. It's a significant area that has a lot of price action around it. Now, oil prices, well, they also kept pressure on investor sentiment. WTI crude oil, those futures rose 2.6% to $84.38 a barrel, following an announcement that President Biden is authorizing the release of an additional 15 million barrels from the Strategic Petroleum Reserve for December delivery. Critics say this is simply political theater for midterm elections and will barely move the actual price we pay at the pump. Well, that is to be seen. But the move in oil prices boosted energy stocks, leaving the S&P 500 energy sector up 2.9% on the day. The lone sector, all by itself, in positive territory by the close. Sector component, Barker Hughes, ticker symbol BKR, was up 6.1%. And it was one of the best performers with a big earnings-driven gain. Then we get to Exxon Mobil, ticker symbol XOM. I want to look at this. I want to look at Exxon Mobil. It's been on fire lately. For the past 3 weeks in a row, this is something some of you may not realize, but for the past 3 weeks in a row, ExxonMobil has been our number one momentum stock on our top 10 momentum stocks list. Number one for 3 weeks. It has been carrying the momentum with it. Now, yesterday, we talked about energy and we talked about ExxonMobil. ExxonMobil was up about 3% today after breaking out of its symmetrical triangle that we pointed out during yesterday's live stream. ExxonMobil was another standout for the energy sector today after it was upgraded to a buy from a hold at Jefferies. Now, yesterday, I shared the weekly momentum insights that are normally only shared with our private investor community. But I wanted to reiterate today what I said about energy stocks as they have continued to retain their relative strength this week. A number of energy stocks were placed on our top 10 momentum stocks list for this week. As a matter of fact, the top 3 spots are the exact same stocks that have been the top 3 for the past 3 weeks, with ExxonMobil being the number one or holding the number one spot for three weeks in a row now. So what I mentioned yesterday was the energy stocks, they're looking pretty interesting because they continue to display relative strength. While crude itself, it's down from its early October highs. So the assumption here is energy companies like ExxonMobil, or if you want to play the sector, XLE, they will continue to produce good profits since oil is still very high on a historical basis. Traders should be cautious, though, this earnings season. Why? Because record high profits being reported among this group as the stock price could wind up peaking on the headline numbers. So it's a bit of buy the rumor, sell the news. But we looked at this symmetrical triangle yesterday, and it breaks out of that symmetrical triangle today for ExxonMobil. Now, if you would like to get instant access to our weekly momentum stocks, our weekly expected moves, numerous trade setups, top 10 stocks in 4 different categories like growth, value, dividend, economic and market insights, and a private Discord server, all to help you gain the key knowledge you need to beat this crazy market. Just click the first link in the description. I'd love to see you there. Now, the remaining 10 sectors all logged losses on the day. Information technology sector down 0.3%, exhibited the slimmest loss and a slimmer loss than the S&P 500, which was down 0.7%, thanks to some relative strength in the semiconductor space. Let's pull up semis here. SMH is the ticker for the Van Erik Semiconductor ETF. Now, it closed up with a gain of 0.8% on the day, thanks to relative strength in ASML. Ticker symbol is ASML. They were up 6.3% after it reported better than expected earnings results. That's what helped to lift up semiconductors today. Now, you can see here for semiconductors this week, it's been using the upper end of the weekly expected move as a resistance line. I am glad to see that this week, the weekly expected moves, those lines are being respected. And that's when you get the 68% win rate from the weekly expected moves. Now, market participants, they received the Fed Beige Book today, which showed that employment and economic activity remained strong, but varied across the different Fed districts, some stronger than others. Now, the report also showed that outlooks grew more pessimistic amid growing concerns about weakening demand and a possible recession. Now, let's go back here to the SPY because I want to give you, make sure you understand where the weekly expected moves are for the SPY, Qs, IWM. Looking at tomorrow's, looking at today's economic data just real quick. Weekly MBA mortgage application index, it declined another 4.5% after a 2% decline last week. And 2 weeks ago, an over 14% decline. It's dropping like a hot potato or something, right? Total housing starts declined 8.1% month over month in September to a seasonally adjusted annual rate of 1.4 million units. The expectation was 1.46 million. So those are dropping as well, just like we said or suspected that they would yesterday. Building permits, they actually rose, surprisingly, 1.4%, excuse me, month over month to 1.56 million. The expectation was 1.55 million. Now, the key takeaway from these reports is that there was an ongoing weakness in starts and permits for single-family units, which were down 4.7% and 3.1% month over month. The downturn corroborates the adverse impact of sharply higher mortgage rates and the impact that has had on buyer demand and builder sentiment. All right. Tomorrow, we've got Ericsson, AT&T, American Airlines, Dow, and Nucor. They're all set to headline earnings reports before the open. Now, on Thursday, market participants are looking at a few economic data reports. 8:30 a.m. Eastern, weekly initial claims. The expectation is 233,000. Last week, it was 228,000. So a growing number there. Continuing claims, prior reading is 1.368 million. And the October Philadelphia Fed survey expectation is a -5. The prior reading was a -9.9. So we'll see how that comes in. Then at 10 a.m. Eastern, we get the September leading indicators. The expectation is a -0.3%. The prior reading was a -0.3% also. So nothing too drastic there. Then the September existing home sales. The expectation is 4.7 million. The prior reading was 4.8 million. Okay, that's everything I wanted to accomplish today. So before I wrap up this live stream, now is a great time to ask any questions that you may have. And as you're doing that, if you could do me a quick favor, just by clicking that like button, sharing this video with a friend, those are great tools to helping spread this video as far and wide. Don't worry, I'm not going yet. I'm going to give you some time here to ask some questions. But those are two great things that you can do to help out this channel, to support this channel. And one last thing, if you like the perspective and you want more, then click the first link in the description to get instant access to all of our information. How about that? All of our knowledge that we share with our investor community. Click that first link in the description, and I'd love to see you there. Okay, let's see. I missed the beginning of the stream, but did you see Tesla's earnings as bad? Wonderful. I did talk about Tesla's earnings at the beginning of the stream. Here's my take on those earnings. Tesla, ER was a huge beat. Analysts had a big miss. All right. Here's what I think about Tesla's earnings. I think they were good earnings. I don't think they were Tesla's best earnings ever. But they surely were not Tesla's worst earnings ever. I think they were really good. Tesla increased their production. Tesla increased their delivery, or deliveries, I should say. Not one delivery, multiple, hundreds of thousands deliveries. They increased those numbers over 50% and over 40%. Production was up over 50% year over year. Deliveries were up over 40% year over year. That's excellent. The saying again, the reiteration, did I use that word correctly? I may have, I may not. I'm not sure right this second. But Tesla reiterating the fact that they want a 50%, basically a 50% annual growth rate on the production is wonderful. I'm not sure if they're going to be able to get to 50% in 2022. Because in Q4, they'd have to deliver about 500,000 vehicles in order to catch that. But they will be close. And Elon Musk did say that this is an average over a multi-year point, okay? So that means some years may be more, some years may be less, but the average will be 50%. I like that. I like that they came out, they reiterated that. A problem spot for Tesla, obviously, is inflation and getting parts on time, especially for batteries. Tesla ended the quarter with a lot of cash on hand, so they've got a lot of options where they can do. The solar business for Tesla this quarter was one of the best quarters ever for Tesla Solar. So that was another bright spot as well. So I think this was a good quarter. I think it was a solid quarter. It wasn't the best quarter, but it was a good, solid performer, a good, solid quarter. Your comment here about analysts having a big miss, I think that analysts did put the wrong numbers on Tesla. I don't completely believe that analysts truly understand what Tesla is. Like I said towards the beginning of this live stream, Tesla is an umbrella company. You have solar, you have electric vehicles, and you have robotics. Then, under the Elon Musk umbrella, not the Tesla umbrella, you have SpaceX, you have Starlink, and then under another umbrella, you've got the Boring Company. So those are all under the Elon Musk umbrella. But just the Tesla umbrella. With solar, it rocked it. It did good. Electric vehicles, it rocked it. It did good. Robotics, we don't have a breakdown for robotics, but I do have a feeling robotics for Tesla are going to be its biggest hit and its biggest revenue source. Robotaxis and robotics, huge for margins. Okay, so that's just real quick. A couple of things I liked about Tesla, and really there's not too much to dislike. I do want Tesla to come up with a almost cookie cutter design that they can take from building Austin, from building Berlin, from building Shanghai. Come up with like a master plan that they can just copy and paste the gigafactories wherever the consumers are, where raw materials go in one side and the other side out pops a Tesla, or out pops a solar product, or out pops a robotics product. That's something I'd like to see them use their cash for. I do not want Tesla to do dividends. I do not want Tesla to purchase their shares. I want Tesla to use that capital as efficiently and wisely as possible to expand and to grow. Because it's not just about the electric vehicles under the Tesla name. Solar, there are so many homes out there. If they can get a little more time with Tesla Solar, a little more time to come up with better products. Because right now, one of the big problems with solar, and why some people don't necessarily use solar, is the energy loss. Those photocells can only obtain so much energy and transfer so much energy. They need to get that number up as close to 100% as possible. And that is just going to take some time before that happens. But once that happens, once that energy can be captured from the sun and put into the home with minimal loss, with minimal energy loss, then more people will do it. If the solar panels on your home can pay for your electricity every month, it's a no-brainer for people to do that. So that technology is just going to take a little more time. But once that technology has been cracked, has been figured out, that's when solar will thrive. Electric vehicles, it's just, again, time. Tesla is growing the electric vehicles. And the robotics, I think it is a winner. Tesla has gone from a concept to 2.0 version of their robot, the Tesla bot, Optimus Prime, in a matter of months. So they're on to something here. And they're already using those robots in their factories in certain ways. Maybe not the bipedal humanoid looking robot, but they're using the robots in their factories. So it was a solid quarter from Tesla. Analysts got it a little bit wrong. How market participants will take this information and use it on Tesla's stock price, I don't know, because you've got a lot of macro headwinds against all companies right now, which that can completely take the stock price down even more. Like I said at the beginning of this video, the market right now is not being driven by fundamentals. This market is not being driven by company earnings. This market is being driven by the Treasury market and Fed policy. That's it. And that's not how a market is supposed to function, which gives us market participants a tough go at trying to make a buck when the market is not acting in the way we've been trained for the market to act. When the market is acting in a way that nobody can expect. But we're trying to understand how this market is moving, at least to the bare minimum here. The information that I share with you on a daily basis, we understand that the Treasury market and that Fed policy is driving this market. So we can make good decisions based off of that information. Okay. The Boring Company is under Tesla, I think. I think the Boring Company is its own standalone. I'm not sure if it's under Tesla. I can look that up and get back to you, though, to make sure we're certain about that. But I think Tesla has solar, EVs, and robotics under the Tesla umbrella. You've got SpaceX and Starlink under its own umbrella, and the Boring Company, I think, is its own umbrella, but all of them are under the Elon Musk umbrella, if that makes sense. Jobless claims, that should be the big mover tomorrow too, right? Yeah, if jobless claims are anything too wild from that mark, the market will move. If we get 250,000 or more, that's going to be negative on the market. If we're under 200,000, that'll be a positive for the market. So the market will move that way. Okay, just real quick, let me run down. I totally forgot to do this. The SPY-Q and IWM, just to make sure you have those weekly expected moves. So for the SPY, it is 369 on the upper end. You can see yesterday it popped out, closed above. Today it came back in. The lower end, I don't think it's going to tag, but that's at 345 for the SPY. And then for the Qs, let them load. Same thing as yesterday, popped out of the weekly expected move, closed above it. Today came back within it. The upper end is 271. The lower end is 250. And then on the IWM, which is small caps like your Russell 2000, same thing. Yesterday popped up outside of the weekly expected move, closed up there, but then today came back down within it. The upper end is 173. The lower end is 160. And just to put it up here to show you the continued strength, this is the US dollar, okay? The US dollar is not going anywhere right now, okay? It is still making higher lows. You can see that. It is still making higher highs, right? Although we are off that high right now, but that has happened before. We just have to go back to, let me get that highlighter real quick. We just have to go back to this section right here where that high was kind of lower, and then this section right here. But ultimately, in the long move the dollar has made all of 2022, it is still making higher lows and higher highs. As long as it continues to do that, it will remain strong, putting continued pressure on equities, on gold. If you're waiting for gold to take off, you need the dollar to chill. And right now, it's just not showing any signs of chilling. So keep an eye on that dollar. It was up 0.8% today. In the after hours here, it is basically flat. It's barely even moved. So the dollar, it's around 112, 113, right in that spot. So keep an eye on that because it's got an inverse effect on equities like the SPY, the SPX, definitely on gold for sure. A big nasty inversion here with gold, but keep an eye on that dollar. A lot of times it's a leading indicator to what's about to happen with the equity markets, especially the SPY, SPX, and gold. All right. Any other questions? I'll be happy to answer them. Otherwise, we'll wrap it up for today. I'll be back tomorrow after the market is closed to talk about what happened, why it happened, and what to expect going forward. Make sure to click that like button. If you're new, consider subscribing. We get a lot of views from people who are not subscribed, so consider clicking that subscribe button. And if you like this perspective and you want more, if you want the weekly Momentum's top 10 stocks list, if you want the weekly expected moves to help you in your trading, if you want our trade setups, our scans that we do, our market and economic insights, and private Discord server, click the first link in the description. I would love to see you there. Okay, all good? Perfect. Well, we'll wrap this up. I will see you tomorrow. Thank you so very much for spending your time with me tonight. I greatly appreciate each and every one of you for doing that. And I'll see you in the next video.